Hey everybody, this is Jim at sb500chart.com. Glad to be back in town after a week, a whirlwind week, where within a period of 8 days I was in Toronto, Las Vegas, Los Angeles, Vancouver, British Columbia, just all over the place, and it was really hard to keep up with things while I was on the road. I appreciate you hanging in with me, and so here we go with a weekly review for the week that started on February 13th. And before we get started, I just need to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. So let's look at the S&P. Okay, we're going to start off here looking at a 15-minute chart to show you that this little area of sideways that we had been in for about almost 10 full days, not quite, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then a portion of a day on Thursday the 16th. This whole area here was just sideways churn that we were on the watch out to see if this would result in an upwards move or a breakdown. And right now it appears that we got the upwards move on Thursday, and that move held on Friday. So with that in mind, we measure where the first reactive move occurred, which was right here. We add that to the breakout, and that tells us that from this pattern alone, we are looking at a move to about 1369, 1368. It's almost there. Additionally, if we back out and look at the chart, we see an inverted head and shoulders right here, and from that pattern, we have measured a target to 1378 to 1380. We are not there yet. So really there's a couple of things going on here, and one of them is, I really wished we'd had a pullback to this neckline, but it looks like the market simply does not want to cooperate with that. Instead, it looks like the market is just going to plow on ahead. It's interesting, though, that we traded down below this little trend line right here. What's also interesting, if we leave this line where it is, go in on a 15-minute chart, there's that line, and there's our couple of days where we spent some time underneath that line. Then, if we back up and draw a trend line from the high of January 26th, the highs of February 9th, and extend that to the right, I just find it interesting that that resistance line and this support line, even though this support line has not been that trustworthy, I find it interesting that these two lines, which are the best lines that we have now to go on for the past few weeks, have their intersection almost exactly at that 1378, 1380 level. So it will be real interesting to see if the market over the next 1, 2, 3, 4, 5 days, see what it does in respect to this line and this line. Because if it takes out this top line, that it's possible. But if it stays within these lines, and all of a sudden it looks like the market is just really starting to not move anywhere, but just kind of get lazy up here, then I would expect there to be a pretty swift drop out of this pattern. but I would not expect it to be so severe as to damage the bullishness of this market, frankly. I am now back on being more bullish, and I'll tell you why. The reason is very simple. It's the fact that we are now over this blue line. And this blue line is drawn from the tops of the 2007, the all-time S&P 500 top, and the S&P 500 high for 2011 before we made this ugly drop down. Now look, there was a time back when we were in this area here underneath this neckline, it looked like there was a possibility that this market was going to head south, test this line, and if it broke, then technically the market would have been in extremely weak condition, and I think we would have made a run down to probably under 900 given a little time. But you know something? Now that we're over this line, I cannot convince myself that we are looking at a bearish market now, at least in the intermediate term. So it looks to me that that this market is going to make this 1378, 1380 top, and once it does, if this little wedge kind of development holds true, then I would expect us to lose, 40, 50 points at some point, come back down, test either this rising line here or even this line down here, which would be in the mid-1320s. That would be a very small correction, frankly, but I think it might be a necessary correction if the market is going to actually rally to the point to where, let's go to a weekly chart, to where it could even potentially test those all-time highs. And guys, that's not off the table. I don't think it's ever been off the table. You have to look at this chart right here and say to yourself, let's draw a line down here under these two bottoms, which just happens to also line up with a very intermediate low back in 1997. But if you look at this chart, you would say, it just seems to make sense. After two attacks at the mid-1500s, and then two real setbacks, and now with where the market has come over the past 3 years, it just seems to make sense. And I have to kind of hesitate before I say that, because the market is littered with the corpses of those who've said it seems to make sense. But it seems to make sense that there would be another run to this line up here. It just seems to be the thing to do. And so let's see if this market can continue this climb. I would expect to have some resistance up in the high 1370s, 1380s. Okay, especially if we were to come back underneath this line and then maybe back test it, and that is certainly a possibility. Look, a lot of times the highs are not made while in a channel. A lot of times prices will chug along in a channel, break down. Let's say we broke down early this week and came down to 1323. Well, that would be a break of this trend. But guess what? If we back test this line, we would probably back test it around 1378, 1380. Sometimes that's where the highs are made, or on a back test. So looking again at this pattern, this little consolidation, here it is again. Got a little false breakout on the 15th, but then the market sold back down to that bottom line, then broke out in earnest on the 16th, and I suspect that from this breakout we can safely be looking for 1368 coming up very shortly, and if it makes it up there and then maybe just kind of wanders around a bit, staying if it stays in between these two lines, then like I said, look for a swift falling out of this little rising wedge. If only if the S&P continues to be constrained by these two lines, and it finally gets to the point where there's only about a 4 or 5 point range in the market. At that point, I think sellers would probably pile on, because there's just not enough. There's just not enough upward movement to keep people in the market. So I think there would be some selling if this little wedge pattern holds true. And again, I think it's interesting that this line and this line just happen to intersect almost exactly at that 1378, 1380 level. Going into the week, in the way of a weekly review, the first thing I want to say is thank you for bearing with me as I was in my travels. That's going to happen from time to time, but really nothing changed that much, so I didn't feel particularly bad about skipping a couple videos, because there wasn't really that much going on. We went sideways for 4 days, broke out on Thursday, and I believe I just made a text mention of that in the members area, that this was a breakout. But now that we can look back at it on a weekly basis, the only thing that I think was interesting in the week was the fact that this line broke, but to very little negative effect. So this market showed some resilience. It showed that it wanted to just consolidate here at this level in the 1340s to 1350s, and now the market has decided that it's time to move on higher to the 1360s. And again, I would be looking for that eventual move to 1378, 1380. And also, just to show you, there's a little room for interpretation here. Somebody might want to draw this line here, which would make this actually more of a rectangle. You don't see very many of those. You see a lot more triangles. But it's also possible that really that this is a more accurate description of this pattern, but it's not hugely different. The only difference is this would tell us that we would expect support around 1356, 1357, in addition to any support that we would have in this rising red line right here. But with this line being violated twice without having that much of a negative effect, I think I'm going to make this line a little bit lighter in color. Maybe not quite that light, because that kind of calls this maybe into a little bit a question. We'll have to see what develops this week. It could be that we're starting to maybe do a rounding pattern, because you can see that the resistance line was going up at a pretty good pace. Then we started to have a resistance line that had less aggression to it, and as we kind of mount an attack on this 1378, 1380 level, let's see if it starts to turn down at that point. So look, that's the update for the weekend, and kind of looking back at the week in review, which we didn't really miss that much because the markets just went sideways. But with this pattern in mind, that's kind of what we were expecting anyway. So look, take care. Appreciate you watching the video. I need to rest up after about a week of being sleep deprived, so I'm glad the markets are going to be taking a holiday tomorrow for President's Day. But look, thank you for subscribing, and thank you for bearing with me this past week. I really felt bad not being able to do what I like to do, but I knew, and you knew, that it was going to, I can't be 100% all the time, and I just appreciate your forgiveness. So look, take care, and look for a video on Tuesday after the close.